Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement, presented by Chris McIntire, Northwest Ohio's retirement planning resource.
And welcome into the program. This is your Game Plan for Retirement with Northwestern Ohio's resource for a common sense approach to planning for your financial investment and retirement future. And we could all use a little dose of common sense in today's complex world. We appreciate you being here, Chris, providing this guidance and insight that you do each and every week. We have with us, ladies and gentlemen, Chris McIntire, president and founder of McIntire Retirement Services. Always a good day when we get to see you, Chris.
Hey, Peter, thank you so much, buddy. Yeah, happy to be here.
And today we are going to be talking about how to be ready for retirement. Are you ready to retire? Not, I am so tired of going to work, setting the alarm and putting in all that time, but financially prepared for the next 25 to 35 years without a paycheck. Chris, no small task there.
No, it is not. And, we've had struggles with the folks that are listening to the show today. They've struggled from low interest rates to now, let's call it high interest rates, and essentially everything in between: COVID, stock market corrections, a couple of financial crises. So, investors in stocks, bonds, mutual funds, that type of thing, even real estate, we've certainly been through a heck of a lot here since, let's call it the 22nd anniversary of the September 11th terrorist attacks that we, just had recently there. And, our thoughts and prayers obviously go with all of those involved and suffered from losses that day.
Absolutely. Yeah, Chris, I mean, it seems really since the turn of 2000, it's kind of been one thing after another and just waiting for the next event. And yet still we, despite all of those factors, have to continue to try to strive and maintain our forward financial progress in order to be ready to retire, correct?
Yeah, isn't that the truth, buddy? And, and you have to have some stomach for some of that volatility. It is hard to eliminate volatility. Unless you just want to put money into a 5% CD, for example, and then not worry about anything in that regard. But, obviously, some people want to keep, higher pace of inflation, have higher potential growth, but, abilities as well.
We talked about on a couple programs ago, Chris, what kind of investor we are and what our expectations should be and where we are more aggressive in our risk tolerance, shooting for those higher returns, also potentially subject to higher risk, volatility, and losses. So definitely have to balance that with where we are in our life progress, in our financial stage in life, our timeline, our expectation for returns, our need for income, all of those things, ladies and gentlemen, we will talk a little bit about today as we run down this resource, this list that Chris McIntire has put together. It's a fantastic one-page report, 12 questions that you need to ask yourself to know if you are ready to retire. So we're going to dive into that, but I do want to make mention that, of course, the true value of the program is the ability to have Chris McIntire as a resource, that you can get a plan put together, including and incorporating all of the 12 items on this list and many more, your specific situation, goals, target, and expectation. And if you would like to get your game plan for retirement put together, or if you just have had a couple questions about maybe your investment accounts or retirement portfolio, pick up the phone and give a call. 800-868-1194 is the number to call. 800-868-1194, 800-868-1194. Chris, I love lists like this because each item on this list does really get you thinking about, well, how am I addressing that? What has been my approach? What should be my approach moving forward? And there is a big transition, I think, in several of these items between our working career and retirement. So that in and of itself, I think, is an important fact to note.
Yeah, it sure is. And, we're going to go through a list here. Hopefully we get through all 12 of them that we've got prepared today. But again, not saying number one is the most important versus number 12. They're not in that order. They're just topics, and the first one is do you know how long you'd be able to generate an income if your paycheck stopped today? So how much can you live off of for your, out of your investment portfolio? We're not talking about Social Security or pension plans. We're talking about, your nest egg, if you will. How long can you generate and sustain that amount of income?
Yeah. And I like the way that this question is phrased, Chris, because we've talked before on the program. And by the way, ladies and gentlemen, past editions of the show, always available on the website, McIntireRetirementServices.com, McIntireRetirementServices.com. But we specifically talked, Chris, in one episode about the unexpected retirement, when we've got our timeline, our thoughts and ideas on the ideal time to retire, and then life surprises us somehow. Really, this is a question, the way it's phrased, that we need to think about at any point in our working career. What if the paycheck stopped, right? Because people get injured or there are layoffs, and how do we survive that next week, that next month, that next year, depending on how long things are, but especially with retirement, when we do intend to stop receiving the paycheck, we better have a decent answer to this question, have thought it through and addressed it.
Yeah, because, it kind of leads us into number two is, have you defined the gap in what your guaranteed income is from like pensions and Social Security is compared to what you're going to need in your retirement? So let's say you need, $4,000 a month, but you only got $2,000 coming in from Social Security as an example, so you're $24,000 a year short. All right. How do you generate that out of your portfolio, to make sure it'll last, using stocks, bonds, mutual funds, real estate, annuities, all those different types of asset classes that are available. And that's where we help folks say, look, here's what we can do now. Here's what we can do down the road. Here's what we can do when, when the going gets tough, for example, like 2022 was a disappointing year for investors in stocks and bonds, especially, even the more conservative investors took a big hit last year. And, sometimes people, well, I'll use the word capitulation, and they say, look, I just can't take it anymore. Get me out. Like, all right. But if you're at the bottom, look at what you missed out going forward into 2023, for example, and, a lot of times, as we've talked on the show, sometimes the best times in the market come right after what seems to be the worst time. So, and I know that's not our topics for today there, but
yeah, but that is the emotional roller coaster of the market, right, Chris? And if you do not have the plan in place, unfortunately, studies and results have repeatedly shown that we end up making emotional decisions and doing the wrong thing at the wrong time, where if we have a plan in place, we can sort of see our way through the fog and make better, more long-term, and typically much more successful financial decisions, despite what the current conditions and the market volatility might bring. But to this question, number two, have you identified and calculated your retirement income gap? Chris, I know that you strive to help anyone feel more confident about their financial situation and about their financial outlook, but that typically, and this is a generalization here, the clients there at McIntire Retirement Services have been ones that have been, whatever you want to call it, lucky or hardworking or blessed enough to generally earn a more comfortable kind of income during their working career. And maybe for those same kind of description of people, we don't pay enough attention or as much attention to the budget while we're working and earning the paycheck. But it seems that it becomes that much more important when we retire, because the shift in income is going to be that much more substantial, and likely the lifestyle that we are accustomed to that much more expensive, right? So this goes into this question of have you defined that income gap? Budgeting, once again, does become pretty important.
Yeah, we had a meeting with a client here just this week, wanting to pre-plan, or, still got a number of years to work yet, about 5 years to work. And they want to say, hey, are we on the right track? And, inputted all the data into the software program. And then when they came in, for the meeting, I'm like, okay, so what's your monthly budget that we need to solve for? And I kind of set it up that way intentionally, because they didn't know it. In trying to get them to say, look, how much do you need? That's a big piece of this equation, because normally, you know that number, then we solve for the, for the gap that we need. I can't solve for the gap if I don't know what the budget is, right?
Yeah. Yep. And that's math, right? This part of it, but you have to have a target to aim for in order to get the math correct for this process, which is really going to be the basis for kind of a lot of other financial decisions and the structure of the plan thereafter.
Yeah, certainly. And our algebra teachers will be happy that we talked about solving for the unknown in the order of operations. So to my math teacher clients there.
Solve for X, and you have to have the correct order of operations. Yeah, we're using that algebra, math teachers of America. Thank you very much. We do appreciate all your contributions. So again, Chris, going into this, figuring it out, we've talked about the largest expenses in retirement. We're going to need to account for those. This is probably all part of identifying and calculating your retirement income gap, but as a result of solving for X, we also get to figure out Y, which is how much discretionary money do we have left over and above what we need to fill that income gap, that we can do all of the things that we always dreamed and imagined retirement to be about.
Yeah, and when we plug these numbers into our software program, we always add that additional travel or healthcare expenses that could come up. So kind of that fudge factor, if you will, and say, look, we build in a just in case thing here, and if it works under those kind of extreme examples, it will certainly work under less extreme examples. But, many people are going to retire and they may spend more money early on because they want to do some traveling, they're healthier, they want to do some of those types of things than they may later on, with the exception of, going into like a nursing home facility or something along those lines, so we typically front end load a retirement, and then, sometimes it tails off, obviously because debt gets retired, houses are paid off, less travel, things along those lines. Take my parents, for example, they don't travel, much, they don't go south anymore or anything, they're kind of home based, if you will.
Yeah. But all of those things worked into the outline of the plan, but Chris, not chiseled in stone here. Those are the type of factors that you continue to monitor and update and adapt the plan to address as well.
Yeah, correct. Yeah, you have to monitor and make some adjustments. And, we do that concurrent. We're in the middle of doing a lot of the portfolio changes here going into the fourth quarter as we speak.
Yep. Number 4 on this list, which again, by the way, ladies and gentlemen, this is a 1-page report. Are you ready to retire? Fantastic set of 12 questions. If you would like to go over this on your own time to reflect on your answers to these questions, to refresh your memory on what they are, give a call, request the Are You Ready to Retire list from McIntire Retirement Services and Chris McIntire. Or if you would like to answer and address these with an experienced qualified professional, you can also take advantage of that opportunity and set up the complimentary review and retirement planning strategy session. Either way, up to you, but you are free to call right now, and I encourage you to do so to at least get this list of the 12 questions. Go over it at your discretion. 800-868-1194, 800-868-1194, 800-868-1194. Number 4 on the list. Do you know if your portfolio is properly diversified? And Chris, not in mid-cap, small cap, equity, fixed income, but properly diversified to provide specific qualities that we need from our money. Enough growth, safety, liquidity, and income. I think those are all important to all of us, but dollars generally can't accomplish all of them simultaneously is the point of this question.
Yeah. And, and there are in cases of this year, the growth stocks are doing incredibly well. The boring dividend payers are, lagging behind. Thankfully, they're still paying off of those dividends. So, that's why you do, we don't want to discount diversification because you need diversification in there, but there are more investments to choose from than just the typical traditional stock and bond portfolio, right? We want to look at structured notes, things that we utilize in our practice. We want to look on the annuity space. Can we get some principal protection? And, even today, CDs, we buy CDs for certain clients, and money market accounts are high yielding right now. So, I suppose that's a benefit to the higher interest rate environment is, we're making more money with dollars just simply parked in a money market, for example. However, we still need to try and keep pace with that inflation, or to satisfy that income that is needed out of a portfolio. Isn't more than the 4% rule. Some people need 6 or 7% to make ends meet. It's just the way life, played out.
And just like Chris, earlier you mentioned how some of the best days in the market happen concurrently or right after some of the worst days. You mentioned the dividend paying and the growth stocks. Last year, that was quite the opposite, right? So over just this year, we may get one picture, but if we look over the course of just as recently as only the last 2 years, a very different picture. And things are cyclical and tend to balance out over time, which is why we do need a portfolio properly diversified to provide for all of these qualities: growth, safety, liquidity, and income. All of those needs will come up at some point over the course of retirement.
Yeah, they certainly will. And, that's why you need to keep pace with this and monitor. And, you even have to look at things you've had for a long period of time, like some of your older life insurance policies. Are they properly funded so that they will last as well? And, are your estate planning documents up to date? In case somebody came up with a health issue and you couldn't make financial decisions. So it's not just the money side. This retirement thing has a number of different facets to it. And, have you updated beneficiary documents, for example, to include grandchildren that are over the age of 18 now, for example?
And those are the kind of things, Chris, that obviously do change. And that's why number 5, do you hold annual reviews of your plan to assess if you have met previous goals and to set new goals and benchmarks, or things like updating the plan with beneficiaries or for current conditions or ongoing changes in life circumstances?
Yeah, absolutely. Have you gone through a divorce or gotten remarried? There's a couple of good examples there. And, those things require some additional attention without question.
All right. Well, we are going through the 12 questions, ladies and gentlemen. Are you ready to retire? If you would like this list, pick up the phone, give McIntire Retirement Services and Chris McIntire a call, 800-868-1194, 800-868-1194. Or if you would like to make sure that you've got a plan formulated in writing to address all 12 of these questions, of course, you've got that opportunity as well. Just give a call to that same number, 800-868-1194, or go online, McIntireRetirementServices.com, McIntireRetirementServices.com. Number 6, Chris, rounding the halfway point. Have you formulated a plan for how to use Social Security to maximize income and protect your personal assets? Chris, a lot of concern with Social Security out there right now, I think.
Yeah, no question about it. And, you and I being self-employed, Peter, are concerned about Social Security for our future. I'm 58, you're 28.
Not quite. Again and again.
Yeah, not quite. But, we all read our Social Security statement and we understand that there are some funding requirements there that have been lackluster. We talked about this, you and I, for years. And, for whatever reason, it's a political football that Congress doesn't want to touch, because when one side of the aisle makes a recommendation, the other side of the aisle says you're stealing money from grandma, for example. And obviously, most of us with rational decision making know that's not the case. They're not there to bankrupt it, and they do need to make some changes to it. And clients bring that up to you and I, or to me in the office, obviously, is, well, I'm concerned about Social Security. Should I take it at 62 so I know I'm going to get something, or, hey, once they start paying me, they can't stop, and so, it is something that we have to address, and we try to, put people's mind at ease. I'll be going to my Social Security continuing education class here in November, and we'll get some updates on, some of the legislative recommendations that get proposed. And, I don't know what we're going to get in this political climate of, we can't agree on anything. That's not good for anybody.
Yeah. And then somehow they come up with a 12:01 AM last minute, maybe the minute after the last minute kumbaya moment where they come up with some temporary Band-Aid solution, right?
Yeah.
And I think there's a lot of people with expectations on this one, Chris, of cuts or moving back the full retirement date or having it means tested in some way. Regardless, bottom line, we want to make the most out of it we can. We need to make an informed decision, because if we personally make a decision that reduces our benefits and then they are further reduced, that could have a very big impact on our retirement outlook across the board, from folks that do have other assets to generate income all the way to those that are dependent on Social Security alone and by itself, which unfortunately too many people are.
Yeah, an astonishing number of people in the United States depend only on Social Security for their income. And it's not the people that are typically listening to our show here, obviously. Most of them have been blessed to have some sort of financial savings and success amongst them. But, as we transition here, talking about Social Security, if that's your only income source or you have limited resources, what happens eventually as we get older, and, we might be dealing with the widows or the survivors or whatnot, if you will. I've got an uncle that's never been married, and, he has planned very well for his long-term care needs, right? Through long-term care insurance, through, looking at what is available, and, do you have the resources to have that? That's often a gap that somebody who's my age at 58 isn't even concerned about now, because, they may be struggling to make ends meet right now, and they're not worried about going into a nursing home. I'll cross that bridge when I come to it, if you will. And, that's, there are many alternatives nowadays than just that traditional, I'm going to buy a long-term care insurance and I may or may not ever need it. There's many other alternatives.
Yeah, and very attractive alternatives, ladies and gentlemen. Well worth the look and consideration and discussion. It is number 7 on the list. How do you know, or do you know how, rather, you would cover the cost of medical and or long-term care expenses should you or your spouse require care? An important consideration. Number 8 on the list, Chris, have you calculated how much income would be lost if you or your spouse passes away? And all of these 3, I think, are kind of intertwined into this conversation of making the most out of those sources of income that we do have available. And the more Social Security is going to consist of, or your income is going to consist of Social Security, the more important this decision is. And really, all of these are questions that we as individuals have some part on, and then the systems that are set up are the other part, but both parts need to be working and clicking in the right direction in order to have an optimal outcome, right?
Yeah, there are certain inevitabilities, right? We all don't know the day we're going to pass away and not wake up. It may be, time in a facility. So the timing of when do we take that Social Security benefit, it is, the part of that equation is, look, let's just see if we can maximize this in case we lose one of you, that we've got a bigger benefit that, to rely on if there isn't any life insurance in place. And that's not that might not be something that's attainable, right? You have to be healthy to get life insurance, okay, or long-term care insurance to a degree. So yeah, a lot of those factors kind of, a lot of these things we're talking about are very much intertwined with one another.
Do you know the cash flow rate your portfolio will need to generate in order to meet your retirement needs? Do you know the percent of your working career income you will need to replace to support your lifestyle in retirement? Again, these two kind of intertwine there. How much income do you need? And then what does that represent from your portfolio, right, Chris?
Yes, absolutely. And, and that can change year by year, depending on where your debt situation is. Maybe you pay off liabilities, or you've got to help a child, for example, and you need to dip into your savings to bail out a child. That's very common these days, right? A lot of the younger generation are, hitting some significant costs with the inflation aspect. And, they've sold their house and don't want to buy another one until the interest rates come down. So they move back in with mom and dad who end up maybe buying the groceries, obviously, right? And helping the grandkids out. So, how much, cash, free flow cash can you generate off of a $500,000? All right. At 5% in a CD, that's 25,000. if we use some structured notes or, some hybrid bond portfolios and add some dividend paying stocks in there, we can get some growth plus the dividends to try to enhance some of that yield. So it's getting a little bit easier right now as interest rates have increased to increase those cash flow rates as well out of portfolios, thankfully.
Yeah, and that is a welcome change, although those interest rates, Chris, as much as they have come up and we've appreciated it, have been tied to inflation. And we know that even in those now relatively higher interest-bearing, higher yield savings accounts, when inflation goes up, we are not generally keeping up with it. So we do need the tool, the growth potential of the market and other investments, right?
Yeah, we certainly do. There are, many different instruments or investments that we utilize, from, the traditional stocks and bonds and mutual funds, ETFs, real estate, structured notes, buffered strategies, and the annuity side. We only use the fixed or the fixed index annuity. We don't typically get into the variable annuity side of things. Just not our flavor, if you will. So, having the independence, with our friends there at Brookstone Capital Management to help us design and create portfolios that we can really tailor to an individual, and help them achieve those goals, monitor, make adjustments as needed. And, because, let's face it, the people listening to the show here today, many of them have, all kinds of degrees of risk tolerance. So we might have somebody that says, look, I'm pretty moderate. I'm a moderate investor, which is your typical 60% stock, 40% bond portfolio. But in reality, they may actually really be a more conservative investor, right? So, when the market's up, everybody's an aggressive investor. When it's down, everybody's a conservative. So, we say that tongue in cheek, and, that's, we have to walk those lines there to, to help coach people through, some of the times that disappoint us in the market, and that does happen, right?
And we've got a great episode here. It's a very recent episode. If you go to McIntire Retirement Services, ladies and gentlemen, to provide some additional perspective on what kind of investor you are, what kind of risk tolerance is appropriate. Does your risk exposure actually match that risk tolerance? And then what are the expectations for capturing returns or being exposed to downside that you should appropriately have, given a varying degree of risk tolerance? This is part of putting that plan together. And another part, Chris, you are a self-proclaimed tax geek, number 11. We're maybe going to get all of them in on today's program, which is fantastic. But you love the tax angle, Chris, and it's not what we make, it's what we keep. Number 11, do you understand how much you will be paying in taxes in retirement and how much of your retirement account withdrawals you will actually get to keep? This is probably a pretty important discussion ahead of retirement and in understanding that cash flow and income.
Yeah, without question, as an, as a independent investment advisor, with a fiduciary responsibility, you want to have some good, solid relationships with some CPAs that can assist you with, some potential Roth conversions, for example, and run, what if we did a Roth conversion this year? What would that look like? What if we sold some stock that they had inherited 10 years ago? What are the capital gains taxes on that? Right. So capital gains taxes are dictated by your income taxes, and it's nice to know, where does it make sense to, does it make sense to do some capital loss selling like we did in 2022? I've got a non-IRA account and, I got, my Apple stock, I lost $10,000 in it. Should I sell it, take that loss, and then buy it again in 31 days. So I have that loss to write off of my taxes, for example, when I go to sell it at a gain. So that we call that tax loss harvesting. So just a couple of examples, of knowing what to know and what to look out for, because it's when you don't know that you don't know is where trouble can get into, is when you can get into trouble. And it's nice having somebody who knows, what experts to bring in and when to bring them in.
And do you have that plan in writing? Finally, ladies and gentlemen, you need to have a plan in writing that covers all of the items on this list. Are you ready to retire? If you think you might be, or want to understand if you are or not, those questions. Am I ready? Do I have enough? How much do I need? If you go through these 12 questions, if you formulate the plan that answers and addresses them, you should have a high degree of confidence in answering those true questions of your financial preparedness and confidence. And Chris McIntire here does offer the opportunity for a complimentary review, a retirement planning strategy session, and to put that game plan for retirement, a written plan together for you. Or if you'd just like this list to go over on your own, pick up the phone, give a call now, 800-868-1194. That's 800-868-1194, or visit the website, McIntireRetirementServices.com. McIntireRetirementServices.com. Chris, a fantastic resource, great conversation today, as always, and we appreciate the time and the guidance and the assistance that you provide to so many proactive savers across Northwestern Ohio.
Hey, my pleasure there, Peter. Good to be with everybody. Thank you.
Always a great time with Chris McIntire. Ladies and gentlemen, your resource, give him a call, 800-868-1194. We'll talk to you next week on Your Game Plan for Retirement.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.